The question is where to from here into 2026, and do they need to take out a little bit more insurance to keep inflation under control?
October's CPI came in above CBA's own forecasts. How worried should we be that inflation is accelerating?
Look, it's definitely a serious concern, and we shouldn't be too alarmed at this stage, but we have seen two surprises now. We've seen a big surprise in the September quarter where we saw the trim mean inflation figure, which is what the Reserve Bank focuses most on, jump by about a percentage point in the quarter. And then that was followed up by another mild surprise today in the new monthly October CPI figure. So we've now had a run of inflation data that has surprised both us and the market, and that will be causing the Reserve Bank some concern. The picture around inflation and interest rates has become much more complicated.
But do you think it's too early to say that the Reserve Bank is losing its way when it comes to inflation targeting?
Yeah, I do think it's too early to say that. I think if you go back a few months, the Reserve Bank would have been feeling pretty comfortable. We had a good set of numbers, we had growth picking up, we had the unemployment rate still rising but still staying at very stable levels, and we saw inflation returning to the target band. Today, that looks a bit more difficult. We've got inflation picking up, we've got growth strengthening, house prices rising, so that makes the inflation outlook more complicated. But the Reserve Bank has been very cautious right throughout the last few years, and we think they'll maintain that caution. They'll want to see a longer run of data before they start jumping to the idea of rate hikes.
Could the Reserve Bank have made a mistake when it cut rates back in August?
Look, I don't think it's a mistake. I think overall, you'd have to say based on the data, the Reserve Bank was in the right place at the time. The question is where to from here into 2026, and do they need to take out a little bit more insurance to keep inflation under control? Our view is that when you look through the inflation surprises that we've had, some of those factors driving that are temporary and some of them look a little more persistent. But there are definitely some temporary factors at play too. So we're still hopeful that as we move into 2026, we'll start to see the economy stabilise and inflation come back towards the target band. But there are certainly risks mounting on the upside.
What do you mean when you say the RBA may need to take out some insurance? Do you imagine that it might discuss hiking rates in December?
Look, if we see a continued run of inflation surprises, so we've had one monthly CPI figure. If we had another couple of monthly CPI figures that were on the upside and presented some surprises, and in particular, if you look at the labour market, until recently the labour market has been easing. We've seen the unemployment rate slowly drifting higher. If that was to shift and we started to see the trend unemployment rate turn around and you saw a little bit more of a tightening in the labour market, those two things together could suggest that the Australian economy is hitting up against some capacity constraints, and then the Reserve Bank would have to look more closely at the situation. But I think it's probably still a little too early to make that call just yet.
How material are future energy prices to an upward move in interest rates, given that we have seen electricity prices rise on an annual basis by 37% to October?
It's a good point, and I think there's two ways to look at energy prices. In the short term, we've seen a huge amount of volatility in the headline CPI because of electricity prices, which is really all related to the government subsidies, both the federal government subsidies and the state government subsidies. They've been rolling on and off over the last 6 to 12 months, and that's meant that we've seen big swings in the headline CPI. The Reserve Bank is not concerned about that. The Reserve Bank's going to look through that. It impacts households, but they've been looking through that. Separate to that, over the longer term, looking a couple of years ahead, we are still seeing pressure around the energy transition, which could see elevated electricity prices for some time, which would feed into a generally higher level of inflation overall. That would be a slightly more concerning issue for the Reserve Bank, but in the short term, I don't think electricity prices are their main concern.
Would you be surprised to see the federal government extend subsidies into 2026?
Look, I wouldn't be surprised. They've been pretty clear that they're trying to unwind those measures, and they would like to, given the fiscal challenges that they face and the need to sort of wean households off that support. But given what we're seeing in the electricity market, given the pressures that are still there on households, I certainly wouldn't rule out the idea of an extension.
Could those energy subsidies have possibly helped Labor to win the Better Economic Manager tag for the first time in the history of the Australian election study by ANU and Griffith universities?
Look, it's an interesting development. Certainly there have been some significant shifts in the way the community is looking at the economy and looking at the two major parties. I'm not a political commentator, but from an economic perspective, I think Labor's done some things very well. We've seen, as I said, combined with the Reserve Bank, we've seen inflation come back down substantially towards the target band. The labour market has held up well in Australia, and we've seen growth pick up. So in a way, off the back of COVID and the pandemic, we've seen a reasonable level of success. Electricity subsidies are one part of that. But the real challenges going forward are around keeping inflation under control from here and, importantly, boosting productivity. And I think in that case, all major parties in Australia have more to do to lift productivity across Australia.
And so would you say that in 2026, the Labor government now in office, its job at managing the economy is going to get a little bit more difficult?
I think both for the government and for the Reserve Bank, the challenge is more difficult into this year. And I think we would say at CBA that the Australian economy today probably has the capacity to grow at around 2.1%, 2 to 2.25% overall. That's what we think potential growth in the Australian economy looks like. And if you start to go beyond that, you could see upward pressure on inflation and interest rates. And the reason we're at 2.1% is because productivity has been coming down over time in Australia. And so the best way longer term to grow the economy faster, get interest rates down more quickly and keep inflation under control is to lift productivity growth. And in that area, there is still more to do.
Luke Yeaman, thank you.
Thank you.